Yo, what's going on, everybody? It is May 31st, Tuesday. Last day of the month. Sell in May and go away. We had a down day today, a little bit disappointing. I thought we'd see some follow through from Friday's strong market close. But whatever, it came off the lows and it did make an attempt to move into positive territory today. At least NASDAQ and S&P tried to move into positive territory. QT starts tomorrow. Quantitative tightening. Yeah. Fed is going to start with $47.5 billion a month for the first 3 months and eventually crank it up to $95 billion. They want to get their balance sheet down to $7.6 trillion. Going to take them a long time at that rate. But here we go, folks, and as I've been mentioning, and you don't have to hear it from me, there's a lot of angst and worry about QT, the dreaded QT, quantitative tightening. When, of course, all that is an asset swap. It's a recomposition of the financial assets in the economy. You're going to have less reserve balances at the banks and more treasury securities, which is basically what the banks want. I mean, you've been seeing now since the inception, since the Fed created that reverse repo facility, reserves, deposits have been shunted off into that facility. Banks don't want them. They don't need them. So, as I've been saying, a reduction in reserve assets that come about as a result of the Fed reducing its balance sheet, I mean, I just see that as being a positive thing. I see that as clearing out some room on bank balance sheets for other assets, namely loans. And we see now, or not now, but I mean, I've been telling you for weeks and weeks and weeks, months really, how the lending trends, loan trends, bank credit has been trending higher, including in commercial and industrial loans. So that is a sector, I guess, that speaks to business activity. Credit demand there is picking up. That's a bullish sign. So I think, again, that the quantitative tightening fears are overblown. I don't think they're going to have, the kind of negative effect that so many people believe. A lot of people thinking, this is going to be the really the beginning of the end. Like we've had a slide up until now, and now it's just going to accelerate, and it's going to cause a recession. I don't buy the recession view, although I will say that the rise in oil prices because, let me take that back. I was going to say the rise in oil prices raises the possibility of a recession, but if I said that, I would have misspoke. And I mentioned this yesterday. We are a net exporter of petroleum. So to the degree that we continue exporting, net exporting, a rise in oil prices, what that does to GDP is it adds to final sales of domestic product. That's helping to offset what the negative drag from the trade deficit is. Remember, there's 4 components to GDP. Personal consumption, that's the biggest, that's about 70%. Business investment, government spending, and net exports. And net exports are always negative. That's a subtraction because the United States runs perennial trade deficits, and they're big. They're very large. As a matter of fact, they're at record levels. So to the extent that net exports of petroleum reduce that negative number in the net exports, the aggregate net exports, it's a positive. Okay? Now, it's not a positive for you at the gas pump. I mean, I've said this before. One of the things that Biden can do, this goes all the way back to Trump. Trump was the guy who really pushed to export our energy independence, as he called it. I don't know what kind of independence that is when you send away your bounty, your independence to foreigners so they can enjoy it. One of the things that Biden can do, which apparently he's decided not to do, would be to ban exports again, petroleum exports again, and keep the supply here in the United States. So we would see, at least inventory not drawn down to the extent that it has since we started exporting, becoming a net exporter. But he's not doing that. For whatever reason, I don't know. Maybe just clueless, maybe bad advisors, maybe he's in the pocket of the oil industry. They're benefiting from it. That's another thing that I think a lot of people don't understand. I've spoken about this in the past with respect to inflation. Now, most people that you talk to will consider inflation, or they will characterize inflation as something harmful to them. And probably they're right. As consumers, inflation is a loss in our income and savings. We have to pay more for the same basket of goods and services. So it is a negative. But like I always like to say, the income doesn't fly out into outer space. We're paying more to somebody else. In this case, could be oil producers, the gas station, food producers, farmers, whatever. And so it's an income transfer. It's a savings transfer. Somebody asked me today, how can it be possible? Because I said inflation is not the reason for the drop in personal savings. It can't be, just by sheer math, simple math. Okay? If I was paying $2 a gallon for gas and now I'm paying $5 a gallon for gas, my savings went down by $3. But the gas station owner who was receiving $2 a gallon for gas and now he's getting $5 a gallon for gas, his savings went up by $3 a gallon. So in the aggregate, it just stays in the system. It just gets transferred from one entity to another. So consumers are paying more, but producers are earning more. Some of it goes out to the foreign sector. But again, and I'll say this, well, let me finish my statement. Some of it goes out to the foreign sector, but if you consider the economy a closed system as a global economy, it stays in the economy. And on that note, with Europe now agreeing to somewhat of a ban on Russian oil, it's a partial ban. I think there are some exclusions in there. The big winner in all this is going to be China. China's going to get the benefit of cheap Russian oil. That should be very bullish for the Chinese economy. That's cheap energy. We're shooting ourselves in the foot with this whole sanctions BS bullshit. China's going to be the big winner because they're going to get, tons and tons and tons of cheap Russian oil. And energy is primary to an economy, any economy. So, I don't know who we're kidding here. First of all, Ukraine is losing the war badly. There's no way they're going to be able to hold out. And we're shooting ourselves in the foot with these ridiculous policies of sanctions that are only hurting us as Americans or Westerners, Europe. So it's ridiculous. Anyway, I got a little bit of a hoarse throat today, so I'm going to cut it short. Tomorrow, the dreaded QT starts. I'm bullish. Today, I think, is one of these headline nervous trading days. Powell was meeting with Biden. We don't know what was exchanged in that conversation. Biden probably saying to Powell, hey, you got to get inflation down, as if, the Fed has any ability to create more oil, a surplus of oil or food. It's ridiculous. And again, raising rates just sets the prices higher. It does not reduce prices. That's it for today, folks. See you tomorrow. Bye.